Well, if you go back in the archives, 50 years, just before it got legalized in 1975 for trading on the COMEX. There was a bull market underway in the early 70s that peaked in 75 when gold got legalized. And the bull market started about $30 and it took it to 200. You do the math, okay? Then there was a bull market low, a bear market low in 1976 at $103, and it went to where? $850 by 1980. You do the multiple. All those bull markets were eightfold moves. Well, where did gold make its last low? 2015 bear low was about a 50% correction. It stopped at 1052 or 1054. Okay, wouldn't shock us if it had another eightfold move. And that wouldn't be even abnormal. It's just a reflection of the three prior bull market moves. It's just a replication of the percentage gain. And when you stand back and look at the degradation of money over time, don't look at it week to week, year to year, but decade to decade. Since 1959, M2 money supply has almost doubled in quantity every decade, regardless of economic excuses, reasons, policies, etc. Now it's gone parabolic. It's not doubling anymore, doubling annually. It's gone parabolic. So gold is simply over the long haul. So either way, gold wins. Because if you go back over the 50 years and just divide the price of silver 1 ounce into an ounce of gold and run it as a percent, it's quite often at 3%. It was a lot higher than that in 1980. And we had silver at $50 and gold at $850. So look at that ratio. And that ratio was much higher. But we're exempting that. If gold were to go just its normal eightfold move, come out of this congestion zone. And by the way, if you look sideways back to 2011, the highest monthly close then was 1825. Okay, where are we trading right now? Either side of that number for the last 4 weeks. Okay, so everybody thinks gold popped. They thought it a year ago. Okay, we're trading either side of the highest monthly close of 2011 bull market. Okay, if it comes out of this congestion zone and says, okay, I've had my breather, I'm back in charge, it's likely to have that kind of move again. The only difference this time is we don't think it'll be an incremental move. But looking at the momentum charts indicates to us that if it comes out of this zone that it's been caught in, and silver does the same. And so if you came in late and bought silver at $28, yes, you've been sweating. But if you bought it at the right time, no, you're not. But that's the kind of move we expect to see. And I expect to see silver go back to a normal ratio that it's been many times before. And if you go to 3% of 800, it's easy to expect silver to go to some kind of level like that. Also silver, if you look at its price charts, there were two peaks at $50. One was in 1980. The other was in 2011. Both at $50. You go back and take out that price high, even the price guys are going to get crazy because they'll know, we're in uncharted land. There's no resistance. They can't define it. And once the price technicians can't define resistance, that's when you can't find sellers because there's no organized spot to sell it. It wouldn't shock me to see silver go easily back to 50 once you clear the resistance that we've defined overhead, which is not the price chart at 30, it's lower level. So we think gold and silver, we think silver will outpace gold dramatically. So we'd watch gold, we'd measure gold, but when gold does positive things, expect silver to beat it. Well, we have our own unique methodology, and it's not price chart-based technical research, which most technical letters focus on price. And if you look at price of any of the major indexes, the Dow, the S&P, or the NASDAQ 100 in particular, they're at highs. So how can you be negative, okay? Well, we don't look at price as a primary technical factor. It's a secondary to us. First off, everybody sees it. We look at momentum of price. And by that, what I mean is we measure price in its relationship to certain moving averages. And I don't mean by that overlaying the moving average on a price chart like you see in the Wall Street Journal. That's not what I mean. We oscillate the price in its relationship to, whether it's above a certain average or below, so it's an oscillator. And when you create momentum charts like that, you can do long-term, short-term, you can do like against a 3-year average, you do it against a 3-day average for a short-term view. You can assess the minor and the major trends within any market based on its momentum action. And we're looking for the same type of things that most price chart guys are looking for when they look at a price chart, namely trend lines that they can plot, or ceilings or floors on a price chart. They're broken, and therefore they change their assumption about that market. Instead of looking for that in price, we look for that in momentum. And usually momentum will change its trend or indicate change in trend before price ever tells you. And most tops and bottoms, when you measure a market against its own momentum metrics, will have already topped before price does. So it's a leading indicator, and we've been very successful in our 30 years. Every major top and bottom in the S&P 500, and usually in an anticipatory way. Like the 2000 top, we put out a report in January of that year, said we're topping here. Okay, well, it didn't actually go down till October. Frankly, what we're looking for in the stock market is a normal top. By that, I mean not what we saw last March. Last March was a crash event, fit the definition to the letter. Before I formed this company in 1992, in 1987, I caught the crash in 87 via S&P futures. It was a futures broker at that time. I saw it coming via momentum metrics. They were breaking down before the market did. That went down 35% in a matter of days. This is similar to the 29 crash, which, by the way, is the only bear market in U.S. history that ever began with a crash. We've got initial evidence of the breakage in the S&P 500 and the Dow, but the actions late last month indicated topping action underway. The main market that we're watching, though, is the leader index. So what's the leader index? It's the NASDAQ 100. Well, we think gold and silver in a category above and beyond that, really, in that they're monetary metals. And so it's not so much the commodity aspect of those metals. In fact, look at gold, for example. It's a leader. When did it bottom? 2015. We got bullish in February of 2016 as it came from a low at 1054 up to 1140. We turned major bullish and haven't changed that view. No reason to change it in our view. Looking at long-term metrics, that is. When did the commodity index turn up? Last November. Much lag to gold. So gold is definitely a leader. In the late 1970s, early 1980 bull market, gold and silver led the bull market in terms of percent gain. Commodities had a big move, but they didn't beat gold and silver. We expect that this time around because this is primarily a monetary event. It's not so much an event of real-world demand for commodities. It's a degradation of the money that we use to measure them by, and also some supply problems that we created. But basically, it's the degradation of money, and the money's going somewhere else other than where the central banks would like it to go. They've already played their game there. So we think gold and silver. We think silver will outpace gold dramatically. So we'd watch gold. We'd measure gold, but when gold does positive things, expect silver to beat it, okay, on a percent basis. Though the gold and silver miners behave like little children. In other words, when the market pulls back, gold pulls back, they pull back more. When gold goes up, they go up more. They're like on a leash. The mama is gold, okay? It holds the leash.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.